they're local here and you talk to them about starting a business, and oh, I'm not going to tell you nothing because you're going to be a competitor. Well, maybe, maybe not. The other thing to do is call and talk to business owners outside of your area. So you call somebody in San Jose and you say, oh, you know, I just want to talk to you. And they know that you're not going to be competing with them, and I'll tell you what the way it really works around here. It's another way to do research. So in your business plan, there's some guidelines on it. Where are we here? Step one. Yeah. So on the page numbers on the lower right, on 6 in the slides, but when you write a business plan, you do the executive summary, which is a synopsis of what your business is all about without all the details. And you write that last. You write everything else, and then you go and write the summary to summarize what the rest of your business plan includes. Include information on your market research, product and service description, why should somebody buy yours and not someone else's, fundraising, the forecasting, what you're expected to make. I mean, you have to do the best you can, but that's really difficult to do. In page 7, there are things of, like, one's a small business development center where they provide information, assisting in small business. There's a small business loan guarantee program. Everybody talks about the SBA loan. It's kind of a misnomer. It's not an SBA loan. It's a private lender who has their loan guaranteed by the Small Business Administration. And when you fill out the application, if you have a home, you might find out that they want a mortgage on your house as part of that loan, just in case you need an encouragement to pay it back. On the big scale, which is way out of our league, is industrial development bonds, where they're issuing loan money to big investors, but that's kind of beyond our scope. On page 8, we're talking about startup capital, and I realize that only maybe 1 to 3% of the businesses that start out go out to the capital markets to get money. Most people use their own money or friends and family, or start out with no money and just earn it and keep going. There are people who make investments, and that's what they do for a living, in investing in companies. On page 8, we have the definition there of an angel investor. And what these folks do is they put money in for a percentage of the ownership. And they're not just anybody. These people are accredited investors, which means that they have over $1 million of assets, excluding their house, and they make like over $300,000 a year. And when they're accredited investors, they're qualified to make investments in companies. Let me explain it a different way. If you were to put a business plan together and went down to the county fair and were selling stock certificates, you'd be violating the law, because you're selling stock certificates in a company without all the proper disclosure to non-accredited investors. So it's just a classification of people. And there's, like in the Band of Angels, in the material there, it talks about different groups that have lists of their members that you can contact about investing in your company. Band of Angels, Tech Coast Angels, Sacramento Angels. There's another one, Angel List, California Investors. And so these are groups that you would put your business plan out to and say, hey, you know, we'd like $600,000. We think we could do really well with that.
Do they have like specific categories or types of businesses they tend to invest in?
Well, each of those listed, they're under the they're kind of different classifications.
Okay.
So some people are more into high tech.
Okay.
Others like cement plants, you know, and stuff like that. Yeah, there are some specialty items.
So we should stay away from the Hells Angels.
Yeah, well, that's what I say. Don't apply it to Hells Angels because their interest rates are too high and their collection procedures are a little severe. So, and they're not accredited. So, yeah, we leave those off the list. Yeah.
That's why I was chuckling.
Yeah. Yeah, they're different. I mean, if you wanted to go into drug dealing or something else, body traffic, you know, then if that's, you know, if that's the kind of business you want, I can't help you, but maybe they could. There's a really good book from John Doerr, D-O-E-R, that he was in the tech business and he helped develop Intel and helped develop Google. And he's got a really informative book on business from the inside and monitoring how things work. And that's what he does full time, is he's an equity investor. Then there's venture capitalists. They're a little bit different in the fact that they only want to invest in businesses that have more of a proven track record. And most all of them will want a percentage of the business, or at minimum they'll have a loan that will convert to equity at some time in the future. So now, page 9, choose a entity type. First of all, I use the term entity a lot, and I need to explain what an entity is. There are legal persons and there's natural persons. Okay. Natural person, they give birth, they go wah, everybody says, oh, how cute, and that's a natural person. They get an ID number, they can have a business. Then there's legal persons, and they're real persons, but they're just kind of intangible. And that would be an LLC, a corporation, a municipal entity. They have ID numbers, they can sue and be sued, they can make contracts, and businesses are legal persons. And I happen to call those all the time entities, just so you know what I'm talking about. The first one and most common are sole proprietorships. That's basically you and either your name or a fictitious name, and that's perfectly fine. You don't have to have an LLC, you don't have to have a corporation. It's definitely not required. Then the most popular right now is the LLC, limited liability company. It's kind of a combination between a corporation and a partnership. And there's a couple different types. There's only one owner. They call them disregarded entities for federal tax. And you have you're running the business, you've got this entity, but on your tax return, you just put it on a Schedule C, like a sole proprietor. Because the feds don't care. And, but the California makes you file a separate tax return each year on the LLC, whether it's one member or not. It's a 555, and they do that because they're enthusiastic about taxing. All of the questions have to do with whether they can tax you more on this or that or the other. Then corporation, which we've all heard of, there's several flavors of that. C Corp, S Corps, I'll explain more about that. General partnerships, that's where, you know, 2 or 3, you're not used that much anymore, but say you 3 started a business and you didn't want an entity, and you could be a general partnership.
That's how it is.
But usually what people will do now is form an LLC.
So the general partner is just saying, you don't form anything, you're just working together.
The way you generally form it is you file a fictitious business name statement and say that you're a partnership. You might have an agreement. This is a fictitious business name statement you can pass around. And it's basically fictitious, meaning that you're using a name other than your given name. So you could name your company the Fantastic Sisters, do everything, okay? And that's your name of your business, and then you have to advertise it in a newspaper by rules. And then after you do that, then the bank, and you get a federal ID number, and then the bank will open an account for you.
But that's not under the LLC, this is separate. So
Yeah, the partnership is a separate entity.
Right.
And it's, you don't file that one with the Secretary of State. Most all business entities, you have to go to Secretary of State. That one, you don't need to. You can just do it on your own. Just like a sole proprietor, you don't need to. So, I want to cover the couple different types of corporations. C Corps and S Corps. Let's see what we have here. Okay, so we have the LLC and partnership. Everybody see that? What I'm trying to point out here is we've got a collective business entity, and there are several owners, so they're working for it, and they expect to get some income from it. It's divided out. But the way it works is multiple owners in an LLC. They do all the work. They got a percentage, the income and expenses, then the net income. And that net income, let's say it's 10,000 or 30,000, and then automatically it falls out for their individual income tax returns. On a form, you're used to getting a W-2. Well, this form's called a K-1, and it allocates, it says your name, you gotta report this amount of income from this business. And if it's an operating business, not a rental property, then you have self-employment tax due on it also. So you have 10,000 each, you go, okay, I got 10,000 to put on my tax return. And then this self-employment tax is, you're contributing to your own Social Security account. And it's 15.3% of the net. So you got income tax going one way, and then the self-employment tax is at 15.3, and you add them up, and that's what you're paying on the income coming from the K-1.
So, because it gets a little confusing for me, if you have an LLC with multiple partners and you don't take any salary from it, will you still get that? And let's say all your write-offs against it are a negative or zero.
That's two questions in one.
Sorry,
So
go ahead.
I'll take them one at a time. The first is, you're going here, you got net income, you're saying, hey, I don't want it, don't give me any income. Tough luck. It's got a hole in the floor. It falls out whether you take it out or don't take it out. It's net income. There are entities that matters. This is not one of them. On an LLC, it's got a perpetual hole in the floor. You can't stop it. Okay, so that's it. You made the income, you divide it out 3 ways, let's say, that's it. You pay tax on your third.
Yeah.
Operating business, then you also have to pay the self-employment tax. Now, the other possibility you raised was we have income and expense, and our expenses exceeded our income.
Or real close.
Or real close. That's two different ones. Okay, real close means very little's coming out. Or if it's a little bit of a loss, very little loss is coming out. Okay. Now, this gets into heavier tax stuff, but if you had a big loss coming through, this is well beyond the course. You have at-risk limitations on your tax return where you can't claim the loss unless you had actual money in the deal. You could only take the loss up to your investment. Okay, so there's at-risk limitations on losses. And there's basis limitations. And that is where I put in 100,000, we had a 10,000 loss, and then I had 90,000, and then we had a $200,000 loss. Well, I can't take it because I don't have basis in it. But you don't need to worry about that because yours will be profitable. Yeah. So those are your two questions.
I don't know.
If you break even, which won't happen, it'll be some, it'll fall out, whatever the small amount. But not to worry. What you want is profits. That's the aim. So don't worry about the downside. Heck with it. Damn the torpedoes. Just get out there and run a business. If you're worried about all that little stuff, you shouldn't even start a business. So that's an LLC. So, and I also mentioned if it's a one-person LLC, it disappears in your tax returns except California. And then there's only one leak in the bucket, and that goes right to your tax return. Normal corporation, when you form a corporation, it works like this. You have income, you have expenses, and you have net income from the business. And out of that net income, you have to pay income tax on that net income within this bucket. 21% to the IRS, 8.84% to California on that net income in a C Corp. And then you decide, okay, we got through that first round of taxation, I want to take some money out. Okay, take some money out. You call those dividends. And now you gotta pay tax on the dividends after you've already paid your tax. You say, well, that's not fun. No, it isn't.
When would it be advantageous to do a C Corp?
What my C Corp clients, we do something every year. And we have income and we have expenses and the net.
Mm-hmm.
And it just so happens their salaries always use up all the net. There's never any net. It's just like zero. Now we're gonna pay 21% of zero. Okay, let's do that. And then we're gonna take a dividend. Well, we can't, there's nothing left over. We already took it out as payroll. So if you have a C Corp, that's how you work it. The advantage, if you had, you're getting investors and, I can't think of many advantages of the C Corp. All the big corporations on the stock market are C Corps.
That's what I was gonna say, that's more big business, C corp. Can I take that?
It is, all big businesses are C Corps.
I mean, for smaller businesses, it doesn't seem like there's an advantage to go with that route.
I think it's a disadvantage, because I'm always worried my client won't take out enough payroll. And the year went by and they get clobbered.
Yeah.
I say, Dodo, why didn't you take out payroll? Okay, well, that's a risk in the C Corp that you don't need to take. But that's how it works. It's double taxation. And that's the traditional corporation. Then the other next type is what's called an S corporation, subchapter S, small business corporation. And this has different characteristics in the way it works. The income comes in, expenses go out, and there's no tax on the net income. Take it out, don't take it out, doesn't matter. There's still no tax on the net income. But that's on the entity, and the income drops out onto your individual tax returns on a K1, like the LLC does. So your net is divided by your owners, and then you're going to have your taxability. These are quite popular. Go ahead.
You're required to take a salary.
Yes, you are. And I'm going to explain why. So in the S Corp, if you had sales, expenses, and net income, and you took all the money out and didn't take out any salary, this money has no self-employment tax on it. Because you're a shareholder. So that's just the way it works. And if you did not take out any salary, the IRS would cry foul. Why should you have your net income not subject to any self-employment tax? You rascal. We're going to audit you. And on line 7 of the corporate tax return, it shows officer salary. So it's a glaring thing on the tax return that you didn't do the salary. And they just come in and say, you didn't do the salary, you got to pay the self-employment tax. So, what we do, and this is the salary part you alluded to. Let's say that company made $500,000 and you take out a reasonable salary, what you think you would be worth on the market, and then the income falls out, you have payroll on your salary, and everything above the salary has no self-employment tax. Okay, another word for Social Security or self-employment tax is FICA. Federal Deposit Rip-off now, or something, I don't know. But we call that beating the FICA game. Okay, because we take out the salary and you get the K1 income and there's no FICA on it. So you save money.
So the salary you draw comes out onto the K1?
No.
No, you get a 1099?
Okay, yeah, no. Neither.
Okay.
We'll try again.
That's okay, I'm fine, you're wrong, that's what I'm here.
Okay, so what happens on the salary, it's treated like everybody else's salary.
Okay.
It comes out of W-2.
Okay.
The point being with it is it's an expense to the entity.
Right.
And The salary is just up in expenses.
Okay,
When it comes out here, that's a K1, and that will be net income.
got it.
And so, then you can avoid the self-employment tax there. These are the most popular type of corporations.
So say we're in this, and we draw a salary, so I'm getting taxed on the W-2 piece of it. Like, and then to K1, what's the advantage of maybe having a higher salary and less on the K1s? Is that more advantageous?
You get to pay more Social Security tax on the higher salary.
Okay. For me, that's okay, for her, not so much.
I don't want to,
Yeah, so,
I don't get social security.
well, Social Security is kind of a nice thing. You know, when you retire, you can get some money back and, help pay your overhead.
Unless you have government
I have
pension
a
offset.
pension.
Okay,
So it doesn't,
you're not enthused about
it has a
Social.
pension offset, so we don't get anything.
Okay, well, that'll be, a negotiating point with you and your other shareholders.
Sure.
is what
I'm
I-
trying to see the advantage between an S corp and an LLC, like, like which one would be more advantageous? And I know it depends on your situation, but.
I don't categorize it as advantage or not. I say, now this is how it works. Where did my, LLC go? Lost my LLC. Okay, income expense, net comes out, self-employment tax.
Right.
So, you might think that's a good deal. Your friend over here might say, that's the shits, I don't want that goddamn Social Security. What do you do? No way. No, we want this, cause then I could just, you know, take out the damn salary and forget the Social Security, and I save money. So, that's, you gotta negotiate that out on your own, what's better. I think who's the better negotiator is what I think. The other thing you could do is, you have an S corp, you have an LLC, and then you form a partnership in that and do business.
So you can do that.
Oh, yeah,
Well, say she wants a C corp, then we have all three.
you could. You could have 31 flavors. Yeah, and then you could form another partnership, and then do business on that, or another LLC on top of it that owns. I have to think about the LLC owning S corps. I think there's a problem with the S corp, because on S corps you have to be at least a resident alien, and there's a certain number of maximum number of shareholders. Non-resident alien cannot be a shareholder.
So when it's deciding which avenue you want to go, it really is the tax piece of it it would be good to consider of what's gonna work best for your situation.
One of the things with advising business entities is you get people that are going along all through the year and they're not saving any money, not putting any money away. When you're not having tax withheld, you're supposed to pay it every quarter. It's not due on April 15th. And some people I've run across have a terrific challenge paying a quarterly payroll. I mean, a quarterly estimated tax. They never do it.
So at the end of the year.
At the
you
end
get
of the
hurt.
year, they get clobbered. Okay, so with those kind of personalities, how about you take out a salary? Pay your tax through. You've been contributing to your income tax all year. And then you're not left with 100% of your income tax at one time. And I have even taken LLCs that you're not, some people say you're not supposed to do this, but they weren't paying their estimated tax.
Okay.
So I told them, okay, you guys, go on payroll. Take out a bunch of payroll, pay it every 2 weeks. That's what we did. And the payroll was up in expenses. The other net fell out after payroll. But that's a big factor. Because it's really devastating to a small business. They're going along, they're working as hard as they can, and they got net income, and they're not paying anything, and then the end of the year comes and their taxes are higher than they are. It's kind of disheartening when they could have chunked it away during the year. So I don't know if there is an answer. I like your 3 different types method. That way everyone's happy. So, S-Corp, the C-Corp, and S-Corp, boy, we're going through these entities. The only one we're not having is having a baby. That's the natural entity. Sole proprietorship. That one, income and expense, and the same thing, you've got net income, and the net income is the self-employment tax. So, like the LLC and the partnership. One disadvantage of the sole proprietorship is that they have a higher percentage of audit. And they have a lower level trained auditor. They have more auditors that can audit Schedule Cs than entities. Entities get audited less. So if you had an LLC or an S-Corp, the percentage drops because they have to have somebody that knows what they're doing at IRS to audit you. But what I recommend is it costs money to form an entity. It costs. You form an entity and whatever it costs to get it created. You have $800 a year you have to pay in any kind of entity. My corporation I formed in 1981 in my CPA business, and I paid over $33,000 in $800 a year payments. So there's a factor, and if you're sole proprietor, you don't have that. And you form the business entity, and then you get it all set up, and they don't, you don't realize what's going on. Within 90 days, you got to file this other form called a statement of information. And people don't do that. It's like $20 to do, but nobody does it. So they get to zing you another $250 for a penalty for not doing it. And then you're on this cycle of $800 a year, at least. I didn't mention the kicker tax on limited liability companies. I can find it. So, with the LLC, California has another tax when you go above 250,000 of sales, 1.2%. And that one, I had one company that they were paying $11,000 a year to franchise tax board because their sales were so high. And I was doing the return, this is nuts.
Would it be more advantageous to do a different model at that point?
I took them out, I canceled their LLC and put them in an S-Corp, and they pay $800 a year.
Got it.
Done.
So we're thinking right. Like when you get to that point,
You don't use the LLC anymore. No. They allow, the proper name is dissolve. And, you have a question, right?
Kind of.
Okay.
I may just be thinking out loud. Can the
Yeah, you
S-corp-
are, okay. Go.
Can the S-corp, could you just start an S-corp, like for us, it's property, passive income. But down the road, we would like multiple, we would like a property management company and a separate thing. Could that be the S-corp?
Oh my gosh, you got big plans. Wow. That's
Shoot for the
impressive.
sky, stars, man.
Let me give you a warning about LLCs and property. There's a thing called reassessment. And you gotta be really careful. If you change entities or change owners. So let's say you had two people in an LLC on an apartment building. You said, oh, well, hell, let's bring you in and bring in another person. You just caused reassessment on your property. Huge.
That's if the property's under the LLC name, correct?
That's what we're talking about,
Okay.
right?
I'm just double checking.
It's owned, I mean, it's no secret, it's public record, the deed says the three sisters own this LLC.
Couldn't the LLC rent it from somebody else?
Oh boy, we're getting creative now. Okay, the LLC rented from somebody else. What are we renting? And
Property.
Who owns it?
The owners of the LLC? Could the
Owners-
LLC rent from them personally?
Okay,
Just so that the house is not in the LLC? Or do you just
then
recommend?
what's the LLC for?
The rentals and the property management of the place?
Okay. LLCs are used frequently in real property investments. Be real careful changing title. If you ever go out of title and there's three owners, make sure the exact same percentage is on the other side. Okay, so you can have three different LLCs for three different properties, and then you can have a manager as an LLC or not. That's all okay, as long as you don't mess with the title and mess up your property tax assessment. But I'm not sure where all this is going. With rental property, what you would probably want to get is, you get building insurance, you can get it now. And maybe an umbrella insurance above that. And that kind of takes care of why people get the LLCs. Because they say limited liability. So, there's anonymity, which is kind of nice on the rental properties. In that you can say, no, I'm not the owner, I'm just the manager. So don't get in an argument with me, a landlord-tenant argument, because hell, I gotta report it to my boss, my wife. I just work here, and you gotta pay your rent. So there's some of that might be advantageous in the management idea. I'm not sure where all, you're right.
Maybe we need a site.
Yeah,
We'll contact on the site.
Got some creative ideas there. But there's a lot of different entities, and don't think you need an entity. I want to emphasize that. I had one guy, he had a product, had to do with construction. Came in, we formed his entity, he got it all started, you know, the cost to get it going. Nothing ever happened after that. And so we had to close it down. And then a few years later, he came back again with another idea and said, okay, I'm gonna start this entity, we're gonna do this other thing. He said, I want you to start this entity for me. I go, nope, I'm not doing it. Have you tried selling this stuff yet? He said, no. I said, you go out and try to sell it and then come back. And went out and tried to sell it, they didn't have to waste their money on an entity. So, I see that a lot. Prove that you've got a business, started out as a sole proprietor. Make sure that the thing's running.
So does a single member LLC have to pay $800 a year? And the sole proprietor does not?
Does not. That is correct. Yeah. I call it the $800 a year mailing list. You get an entity, you're on that mailing list, you get to pay it every year whether you like it or not.
Except for last year.
Yeah.
You got a break last year.
They offer some specials once in a while. I mean, yeah, so that is a savings without the entity, but I gotta explain how they say, you know, you get this limited liability, you get a corporation, I'm not personally liable. Let me explain how that works, which is a misnomer, misunderstanding. Okay, so if you have a business entity and that business entity has, let's say, signed a lease, and there's a liability there, or bought a truck, and then through the entity, and then the owners, if their name's not on the loan, they're not liable. But what happens is there are transactions that are not signed for. By that I mean, let's say, okay, we do, when you have an entity, you have to have an agent for service of process. We provide that service for companies. So if somebody gets sued, they give us the papers. And and we had one recently where our client got a lawsuit for wrongful death on a scuba transaction. And so you talk about limited liability. Well, let's see how this really works. The opposition sues the LLC or the corp, and they sue the owners. And you tell the judge, hey, I'm an LLC, man, I'm exempt. I got Harry Potter's cloak on, you can't see. And the judge says, no, you stay on that, we'll find out. And so the problem in that scenario is in a sole proprietorship, in this example where you have an entity and the person got sued too, the person can represent themselves in court. They cannot represent their entity.
Why not?
Law.
Okay. Got it.
Because the courts don't know how many owners. And you say, I'm representing, and there's more owners, and you're practicing law. You're representing someone else, you can't do that.
Got it.
So in that scenario where you thought you had unlimited, you know, I don't have any liability. Your entity got sued, you got sued, you try to represent the entity, and the judge says, I can't talk to you. Your LLC or corp is not represented. So you have two choices then. You either hire a lawyer, you go and find out, and they say, well, yeah, we do that. It's only $45,000 up front. And if you don't have the lawyer on that entity, then you go into default. So these people that say, oh, you get an LLC and there's no personal liability, I don't think so. If you want to represent yourself, you know, it's a frivolous suit or something. If you're a sole proprietor, you can go represent yourself. So if you want, I'm just saying. But on the entities, you don't have any choice. So it's I think, misleading that everybody just says, oh, flip, oh, no personal liability.
That's because somebody can sue you and the LLC.
Right.
So if the LLC goes defunct, but the house or the money and all that is in a different LLC, they can have.
Yeah, you know what we're talking about now? We're talking about asset protection is what you're talking about. Whoa, that's a big subject. So you have a business, and you're running that business, but then you put all the assets in another entity, in another LLC. So that entity up there gets sued, and they say, well, we're gonna take all the assets in that company. Have at it. Here it is. It's a piece of paper.
And that's
Well,
what
I'm
I was
only leasing
saying.
this equipment from over here. So, and we didn't do anything, and we're not in the case.
That's what I was saying about the management company would hold the money. The rental company or the LLC that does the rental, it might be different. The LLC might pay the management company to manage it or whatever, something like that.
Okay, but your liability is arising out of a rental agreement with a tenant,
Under the LLC, yeah,
right?
right.
So they have a right to claim against the LLC.
Right.
And perhaps the insurance.
Right.
And the owner did all this bad stuff, so you think the owner ought to come in and do that, because their name's on the LLC. Huh. How about that?
Yeah, no, I
And yeah. Another unusual thing about the LLCs is, it's called a charging order. If you have a judgment against somebody, you can levy their assets, big bank accounts, levy wages and stuff. But in the LLC, what it says is you can get a charging order. You're the creditor, and the LLC's the debtor. So you say, and a charging order says, whenever you make distributions, you have to give it to the creditor. And then the LLC says, good luck, we're never making distributions. So that's one of the beauties of the LLC, is the charging order. So, are we having fun yet? Everybody confused? I know there's a lot on the entity side, but what you do is you look and see what you want, and then find out what fits better for you. If there are a lot of owners, it's probably better having an entity than not, just because you can divide stuff up and make agreements. So, in terms of procedures, if you want the S Corp, you file a C Corp, and then you file an election with the IRS to become an S Corp. There's another thing in the tax law where you can form an LLC or a Corp, and then you apply to the IRS, and they'll let you tax it like another entity. It's called entity classification, IRS form 8832. Why people do that, I have no idea. You form an LLC and you want to be taxed as an S Corp, okay? Well, why didn't you form an S Corp? But people do it. So in terms of business names, so if a business name is important to you, you can do several things. One is statewide, you can look at the database on Secretary of State's website to see if there's other names that are out there, and statewide. And the Secretary of State will not let you form a new entity that's too similar to someone else, and that's statewide. The other way is when you're filing a fictitious name in the county, there's 58 counties, so there's no place to look up the names, and you might, we had a problem in the office recently where this person wanted to protect their name. They got a trademark with the Secretary of State, and they got a fictitious business name. Then someone in LA area formed another with almost the same name, very similar. And they formed a corporation. So there was a dispute on who should have that name. And they went back and forth. It never really got resolved, but it kind of appeared that the person with the fictitious name had less ability to enforce their rights to that business name.
Did you go by dates? Who filed first? Dates.
I
Who filed first?
I understand, yes, and the person with the fictitious business name started first, and they got their trademark around the time the other person formed their business entity, but I was suggesting, I was not handling the case, that they find a court case to try to determine whether a fictitious business name is, earlier. It seems like the fictitious name is carries less authority, because if there's 58 counties, who's gonna go look for them all to see that there's somebody like their name? But they can go on the Secretary of State's website and find out statewide. But it ended up not being resolved. But the thing with the person with the fictitious name was really mad because they thought they don't want to spend the money on the legal to go after it. Because their attorney said that they have less likelihood of winning.
Even though they have the trademark?
The trademark or service mark, it's kind of goofy the way it was, because they said they can't trademark a word, these certain words, and it was the artwork around it.
Interesting. Loophole.
Yeah, technicality from the law.
Even if they're in totally different industries?
Well, these ones were in the exact same industry, serving the exact same type of client.
Because you've got Apple Recording Industries, which the Beatles use, and then comes along Steve Jobs with Apple Computer, and the judge said, oh, totally different industry, you're okay. And they have a different trademark symbol
Sure.
and everything, so that's what I
So
was thinking.
what we're talking about there is unfair competition. And in your example, they're not even competing for the same customer, so I think that's the right decision.
Of course, nowadays with online music and everything, I don't know if Apple Recording is still in business or
Yeah,
not.
well, it's so much of it, I mean, web domains and things, it's really difficult to try to protect the name. I just use my own name. Nobody's tried to carbon copy it yet. I guess
That's my action item for tomorrow.
yeah, it's probably because of my reputation. I don't think with that, have with that. Okay. So you can get entities formed online, LegalZoom, all those. We form legal entities, but we give you a lot more value. We give you the stock certificates, the board of directors, bylaws, the employer ID number. Another factor in running a business is business location. So more and more businesses are operating out of their house, and at some point, you know, licenses and other things are, they wanna know what the address is. And, if you're running a business out of your home, the city business license, people might be concerned about advertising. Another way to do it is rent a mailbox at the UPS, Federal Express store. It's a commercial address. And one of the advantages of that is you just leave that, you know, say what's your address, that's what it is. You get mail there, shipping. And I recommend that, especially for women. You know, they don't want the booger man coming around and bugging them at their house. So they just say, well, that's my address over there. And then other people say, oh, I'll get a P.O. box. Well, there's a problem with the P.O. box, and that is, you order something on Amazon and you have it shipped and it goes to a P.O. box, it can't get in your box. FedEx and UPS can't get in there. So it's not a real business address. So I do suggest that it's not deceptive, it's more protecting your own anonymity by having those services.
If you're running a business out of your home, can there be write-offs with some of the expenses?
Oh yeah, man, we call those things home office expenses. Just deduct them all over the place. Whoa, yeah. The problem with the home office is on the tax return, you take first of all, you get a square footage of your exclusive use.
Right.
It may be an office, it may be a garage, it may be your own living room, whatever it is, the exclusive use. You can't have any fun stuff in there. It's just gotta be work.
That's fine.
And then you take that percentage exclusive use over your total square footage, and let's say it's 10%. So 10% of the utilities, 10% of the insurance, all that. There's another way where you can take that business use percentage and multiply it times just a direct factor and take a deduction from it too. What happens on the home office expense when I'm on tax returns, oftentimes it's a lot of gyration and bookkeeping for an itty-bitty deduction on the other side. So, but it's a factor. But yes, you can, anything that you use, vehicles, you have to allocate between business and personal use, at least on estimates. And I've seen people get really carried away with the home office. They say, oh, half the whole house. Yeah, I doubt it. You know, it's like, is it really exclusively used for the business? You need to be careful on specialty licenses. You know, the Department of Consumer Affairs, you know, for all kinds of things like nail salons. Just everything under the sun seems to have a specialty license these days. And if you have a license through the state, oftentimes you cannot have an LLC for that reason. They exclude LLCs if there's a license, a state license involved. You'd have to check that. Employees. Virtually every business that's come in to my office, they're going to start a business. It's like a script. I kind of chuckle about it. They go, we're starting this business and we're not going to have any employees and everybody's going to be on 1099 and we're not paying no payroll tax. Yeah. Okay. Well, I don't think works that way, good luck. I had one client that had independent contractors, he was a carpet installer. EDD came in and audited 3 years back and gave him a huge tax. The employee's tax, the employer's tax, penalty assessments on top of it. It's way more expensive to have independent contractors. I don't recommend it at all. It's sucker bait. And this is what happens too. You hire the independent contractor. Okay, yeah, I'm using my own laptop. Oh yeah, okay, what do you do? But they don't have any of their own customers. They don't have a business license. They don't have a business name. They're only working for you. And then they're not working for you anymore, and they go down to unemployment, EDD, and they say, who's your last employer? Ah, that outfit over there that never took out any tax. Oh, guess what? Then you just brought the Stinger missile in. And it happens.
My husband worked for an independent contractor, just two of them. And that gentleman was so accurate, he took out his tax. My husband got like the statement, he had taxes and unemployment, everything was taken out, it was great. So when it was seasonal, my husband wasn't working, he went down to EDD, he got unemployment insurance. And
Right.
everything, and the gentleman said, yes, I wanna do that, I wanna be fair to you.
Okay, let me ask what the guy did. You said he did withholding?
He did have, yeah.
He did
all-
withholding for like payroll.
Yeah, he was an independent, he was an irrigation contractor.
I'm not following it because,
Well, I'm just trying to concur with what you said.
okay, but what I'm saying is your husband would be the independent contractor, not the guy who's working
No,
for.
my husband was an employee.
Then that's okay. Okay. Yeah, it doesn't, the problem is, and California's really strict on the employee aspect. They went after the Uber drivers, and they have this test, it's really strict, that, you know, the independent has to have their own business, their own equipment, things, they set their own hours, their own skill and everything, but there's one line item that knocks it out all the time, that they're not in the same business as the employer. So let's say with the irrigation, the guy's doing irrigation and he wants to hire your husband who's independent contractor and does that, and you just hire him.
Yeah, he wasn't, but yeah.
This is just an example. And under the state law, the prime person is doing irrigation and the independent contractor is doing the irrigation too. It knocks it out and makes it an employee.
Yeah.
So
So what
my
happens?
recommendation is don't do it. Make sure everybody's on payroll. There's another factor, I'll get your question in a second. If you have to have workers' comp insurance. So if they fall down, break a leg, they have workers' comp they can claim against. If you don't have it, it's a $1,500 fine or more per employee. And then you're not limited. The workers' comp covers the claim for the injury, not the employer. It's a big deal.
So the independent contractor would have to pay taxes, then the employer would have to pay also taxes, right?
Okay, the way that it works is the government goes after the business, always, because the business is the bad guy. Not the worker, they're never bad guys. Okay, so the business hired independent contractor, and then they call it reclassification. Then they assess it against the employer. They ignore the person doing the work. They don't even look. And then they assess all the payroll taxes they should have taken out. And then the employer says, well, I know that Joe reported all that. They go, prove it. Joe, can I have your tax return? No, you can't.
But Joe's still liable for paying taxes on his income.
But the government doesn't go after them. It's the business they go after. Because they have all this plethora of penalties and back taxes and 3 years. They don't care about the employee. Or you know, the other thing too is people go, oh, I did everything right. I issued 1099s. And then the EDD uses the 1099s to go against you. Oh, let's go audit all of these. They're only after the employer. And that's the risk. That's what we're talking about, starting a business. You would be hiring somebody. Put them on payroll. That's my message. And you get a payroll service, you know, ADP or Gusto or some of the others. Call in the hours, they send the paychecks to their bank account. Do it right. There are some government websites that give information on startups. Another thing you're going to need is a good bookkeeping system. We've always used QuickBooks, but you need some kind of accounting system. You want to keep it up all year so that it doesn't get like a big pile at the end of the year. And, you know, a lot of this, you know, get it set up, get a tax preparer to help you sort out types of things you can deduct and not. On page 39 is a sample of profit and loss statement. It's a QuickBooks example. So you have your income, your expenses by category on your net profit, and you need to use that net profit and calculate it what your income tax is going to be every quarter. So you pay it in every quarter. And then the next page, 40, is the balance sheet. This is information giving you feedback. It shows your assets, liabilities, capital, how much you have invested in the entity. And then the other report that we show there is the statement of cash flows that is not tax related. It's just money coming in and money going out and what's left over. There's lots of other material. We're not going to be covering marketing, internet presence. That's a huge subject on its own. In business, I heartily recommend that you do everything honest, integrity, keep your word. It's my belief that honesty is the glue that holds the entire society together. And if you do report your taxes right, everything honest, you can sleep well at night. You don't have a bunch of worries. If you are selling a product, you need to get a seller's permit. So you can collect sales tax and pay it over to the state.
Does that apply to a service or just a physical product?
It just applies, it does not apply to a service in California. Hawaii has one services, but it's a product, so you're selling to the end user. So you're selling something on the internet, the person who buys it's gonna use it, yes, you have to collect tax.
So I know just for fun, I joined Martinez Arts Association. I wasn't selling anything, but when I went to the meetings, okay, all you people that are actually selling your art, you need to get a seller's permit. And they instructed everybody how to do that.
And I agree.
Yeah.
If you're selling, there's two levels, one is wholesale, one's retail. But even going to the flea market and selling things in the flea market booth, you have to collect sales.
Really?
Yeah.
Is there a certain dollar amount that is over and above? Nope.
No. That's just, you know, what the rules are. And, if you're gonna get a resale permit, when you're filling out the forms and stuff, don't make it seem like you're gonna be collecting a lot of tax. Because if you say, oh yeah, we're gonna be selling all this, and they say, okay, well, you gotta give us a $4,000 deposit, just to make sure that you pay your tax. So if they want any projections on what you're gonna be selling, it's peanuts.
And on the business licenses for the city, different cities have different requirements of what type of business you can run out of your home, correct?
Yeah.
You know, Pleasant Hill is different than Martinez,
Right.
different than Concord.
So, and if you're going around to trade shows in all these different cities, technically you're supposed to get a license in each city. I wouldn't bother. Get one where your business is located. Or where your mailbox is, etc. address is located. But one city business license ought to be enough mostly. The other thing is on wholesale, you don't have to have a resale number. Well, you should have a resale number, but the way it works with wholesale is you're relying on the buyer to sell it to another third party. Okay, so the end user is located after you sell to another company. But what you need to do if you're doing wholesale is you have a card for each of the wholesale buyers that they have a resale number and they're gonna charge sales tax. So that you can refute any argument from the Board of Equalization that you owe sales tax. There's through the Small Business Administration on page 49, an outfit called SCORE, Service Corps for Retired Executives, and they provide free consulting. They're executives who retired, now they're offering service for free.
It's in the front.
49? 49.
It was like, yeah, this ordinance. It's on there, the last page.
If you don't have it, let me see if you have it, I'll give you, maybe it was left out. You don't have it.
It's in the front, or like if you. Yeah. There's the last. There's the last.
Oh, we got a new ramble. Assessment. We got a document.
Oh, that's 49. the stapling pages are out of order.
Yeah, we have schizophrenic stapling systems.
There. I thought I read about it earlier.
Yeah, we just wanted to keep you guessing to make sure you're still awake.
That's right.
So, looks like I've ran out of pages, whether they're stapled or not. What other questions do you have? Yes?
So what about these people, maybe you know not, if they start a blog on the internet and then all of a sudden they're getting sponsors and advertisers
Patreon?
and they're getting paid from those people. They're not, whatever they're blogging about, they're not selling that, they just get their income from the advertisers. So that's
Yeah,
just
there's a couple-
income.
all the income you get on the internet ends up taxable.
Yeah.
And another common one is you have a website and you link it to something you wrote about, and they buy it over there and you get a referral fee. Happens all the time. You see those articles that say the 10 best whatchamajiggies. And you read that article and you click and you buy a whatchamajiggy. And they get a percentage. But all the stuff that you get income from whatever source, unless it's a bona fide gift. You know, somebody gets hurt, the kid gets hurt and they have a web page and people are donating money, that's gift. You know, but if
Oh,
you're
the
doing
GoFundMe.
something,
The GoFundMe pages.
yeah, if you're doing something like a blog and everybody's enjoying it and they're paying, then that's taxable.
Where GoFundMe is not.
You have to look at it in terms of a gift. If you had an account that said, help us start this business in rental properties, and everybody gave you money,
You can do a GoFundMe.
Two questions. So for, on slide 4, you mentioned doing like market research. You referenced Google having a database that they use for marketing purposes. Like, can you elaborate on more on what that was?
Okay, on market research, Google has one. I've heard that you can look up different things about different industries. What you're trying to get is facts about the industry, volume, number of participants.
Oh yeah, is there like a specific website that you're referencing, or is it
Which
run by
page are you
Google?
on?
Slide 4.
Oh, that was, yeah.
Or was it just do market research on Google?
It's not market research on people, it's market research on the
On
product.
Google, no, I guess
I
my
think,
question was, is there like a specific site that you're referencing, or are you just saying, do
No,
market research?
I don't have economic or statistical links.
Okay,
I think
Yeah.
he might be referring to Google Analytics.
got it,
So,
okay,
yeah.
That's what it was,
Yeah.
Google Analytics things.
okay.
That's
And
just
then-
one, but there are
Yeah,
others,
there's others.
Okay.
you know.
And then also on that same slide, seek professional advice, which is sound advice, but I feel like that's kind of and maybe it's not a chicken and the egg situation where it's like you have a business that's viable, so then it makes sense to seek advice versus seeking advice only to find out that I guess your business is not really a viable one. But
I don't think that when you start bringing in viable, I don't think anybody can tell you what's viable. I mean, unless they're got a crystal ball.
Mhm.
But I think what they're talking about there is maybe professional advice on setting up bookkeeping systems or complying with OSHA requirements, or if there's some complexity of things that you're going to have to comply with.
Mhm.
That's where they're talking about there.
the ones listed, which one would you say, like, or can you prioritize them, or?
Which page? are we on
Still
now?
slide 4, so like private, legal, financial and accounting, professional service, or financial
Okay.
and accounting professionals, like,
So,
where should I go first?
I'm not sure you should go to any of those first, okay? First of all, what kind of business do you wanna open?
Consulting.
What?
Like engineering, consulting, and design.
Engineering, okay, so is it engineering for construction or engineering on software?
No, construction.
Construction, okay. So, in that area, I think looking at other companies that are providing the services that you wanna provide, and even hiring their service to evaluate what you're thinking, if they would agree to that. So, you know, a lot of the engineering are kind of combined with architects at different times, and figure out what niche you're working, residential, commercial, drainage, what your specialties are, and then, that's what I would do, is find companies that are offering your service and go talk to them. And, what others, it sounds like you've already got the technical skill. And, you need the normal things for starting a business. You decide on what kind of entity.
Yeah, I think the question was more like, should we be consulting a lawyer for getting legal advice for it? Is that something that we should start before we start the business? Was that the question?
Yeah, or just, yeah. like a good
I understand the question. I'm groping with a benefit before I suggest you do anything. And I mean, if you're going to be signing a lease on a building, maybe a lawyer might be useful. If you wanted help on evaluating different kind of entities, you could find somebody who knows entities. If your engineering services needed a detailed type contract, then that might be legal services to get that set up for you to start.
Okay.
So you're, and the other is trade associations. And there are hundreds of different kinds of legal forms. We pull legal forms off the internet all the time. And if it's just in that idea, you could ask colleagues either in a local trade association or see if they would allow you a copy of a master form that they use, checklists.
Okay.
But I don't suggest you go around and unless there's some identifiable benefit to you.
Okay.
Yeah. It's just a waste of time and money. Yes?
Is it possible to file LLC company with someone who doesn't elect legal stuff in this country?
Ask the question again.
Is it possible to open a LLC
Yes.
with someone who doesn't
Live in the country.
legal in this country, not legal?
Okay, when you have, someone who's, first of all, what you have is, you need an ITIN, an individual taxpayer identification number.
He's already working. He works here.
I
He
understand.
pays taxes and everything.
Okay, so he has an ID number.
Yeah.
That's where it
He's
started.
second number, yeah.
Okay, because you can't form an LLC, you're gonna have to issue a K1. The K1 has to come out with an ID number on it. So that's where I was starting. But, there's nothing I'm aware of that would prevent you from, on an LLC, going into business with that person. You cannot do it on an S corp. Fail on an S corp. So the LLC will be, fine.
Thank you.
What other kind of businesses do we wanna start? Yeah,
Decluttering.
yeah.
So if I hire somebody for a one-time job to help move things out of a house, just a random person, I just use that as an expense.
You can use it as an expense. Anything that's directly related to generating that income is an expense. But that isn't the
I know,
question I
that's the
thought you were
problem.
gonna hit me with. I thought you were gonna hit me with the question, is that an employee or not?
Well, that's what I'm saying, I'm trying not to make them employees.
Yeah, well, I have trouble telling you to hire an independent contractor. I have a risk aversion, because if it's not correct, somebody might get irritated. So,
Well, then there's the workers' comp,
yeah.
if they drop a dresser on their foot.
Yeah, we had one that had real property and they had to do some remodeling and they just went down to Home Depot and got all the people paid in cash. The only trouble was there were several other beneficiaries who thought that there should be some kind of receipts to prove what they paid. So that caused some problems in the family. But, there's another one, I come across, because we just moved offices in Walnut Creek. It's called TaskRabbit.
TaskRabbit.
And we called them up and, we said we've got all these extra desks and we'd like to get rid of them. And they said, okay, where are they? This much. They were there in 2 hours, took the things away and gave them a fee and we were done.
Yeah, so that's just, so they have the workers' comp.
I don't know what they have.
Yeah.
I didn't ask. I didn't ask. I just called TaskRabbit. And, they charge my credit card, they charge it through TaskRabbit?
Yeah.
Yeah, so we hired a company.
Yeah,
We didn't hire a person.
you hired the company,
Right.
Yeah.
And they sent some persons,
yeah.
and those persons are not my persons.
So my idea though is just to give the advice for decluttering and almost give them all the names of all these places. And then you just pay me a fee for the advice.
For the consulting,
Your
sure,
consulting fee.
sure.
I'm not lifting anything.
That's fine.
I'm not hiring anybody.
That's fine.
You
It's
guys
called
do it.
consulting income.
Yeah,
You just report it when you get it.
I just want extra income, that's all.
Yeah, but I thought we were selling art.
I said years ago, I
Oh,
joined.
years ago.
I
Okay,
joined
now
Martinez
we're
Arts
moving into.
Association and I heard about
Okay.
all of
I
that.
thought that was more recent.
No, and my husband was a licensed realtor for 20 years. So we investigated, can we write things off a home office and this and that, the mileage, and got the P.O. box, and we had our own rental property, so, yeah, it was interesting.
But did you have an LLC?
Nah, we didn't do all that. No CPA and attorney, just income, that's all.
Yeah,
But he works
there's
for
a gal
most
that
of the
teaches at this school that has a decluttering class.
Yeah, there's a lot of people out there. Oh, she's in class.
Yes, and, yeah, you get the word out and, generate some revenue doing that.
Yeah, it just, the advice, because I found, in my experience, when I've worked for other companies and other consultants, engineering consulting firms, I know of, you get paid for advice, there's almost no overhead. you get your income.
Yeah, it's a service. Or we have more of a service economy now. So it is
Thank you.
solving problems for other people that
Cannot.
it's worth it more to get the problem solved than your fee to help it get
Yeah,
solved.
I mean, I could organize an office and say thank you, goodbye. Cause that's kinda what I'm doing now on a temp basis. I'm semi-retired too, so.
But you don't like the idea of bringing your own gorillas in there to move stuff around? Throw stuff in the truck?
No, somebody else is do it.
Alright.
I don't wanna have to worry about workers' comp and all that kind of stuff.
Yeah, okay.
Simple, sole
proprietor.
Proprietor, just
That is simple, and that's a good way to go.
keep it simple, just election, do what I want.
Exactly. No, I think there's nothing wrong with that model.
Yeah, thank you.
Yeah, it works.
Check.
You don't need a lot of equipment.
Yeah, that's good.
You have your
So,
skill.
cause before, with the rental property, my husband and I, we did all the work ourselves.
I know about work. I did that once.
Until our backs went out, I got carpal tunnel, things
Wow.
started
You
happening.
got the whole enchilada.
Yeah.
Wow. Jeez. So, yeah, with your consultant, you're not gonna wear anything out. Yeah.
It's my brain.
Yeah.
So, question about, do you have any advice on where to go for like insurance advice? I'm trying to figure out what kinds of insurance. So I know I need like errors and omissions insurance, trying to figure out if I need like general liability as well. Is there a good place to go for those sorts of questions?
I have an insurance agent that I've had for a long time at State Farm.
Okay, so
I
I
asked-
think
I
I can
asked-
for an insurance agent.
I asked him,
Okay.
and then start from that.
Okay, I think that's pretty reasonable.
When you're dealing in, with an agent, insurance agency that has a wide line of, insurance, they can usually direct you.
Okay. Good.
Yeah, if you have like we just moved offices and we had to get, certificate of insurance for the owner. And then, for like engineering type firms, there's probably trade associations.
There are.
And that's a good source for specialized
Okay.
types of insurance. And they would be a good reference.
Okay.
We can also contact you for advice.
You can contact who?
You.
I'm around, yeah. I live here every day.
Consulting LLC.
Yeah, I haven't been tooting my own horn much, but, yeah, we're here.
You got good energy.
You're fine.
Yeah.
I like that.
I entertain myself, how's that?
Yes.
But yes, we're here to provide, the services that we do. We're happy to help solve problems.
Best way to email you or call you or?
Yeah,
Oh, gotcha.
yeah. Call and talk to Enid. This is Krista.
Okay.
She's more of a technology, legal assistant, tax. Yeah, we're happy to help. I mean, this is my specialty area because I've been doing tax since 1976.
That's kind of, we have a lot more questions around the tax.
I don't doubt it. I mean, you guys are a fountain of questions.
Well, the kicker is that our LLC is in Arizona.
And where's your property?
In Arizona.
Oh,
That makes sense.
It's cheap.
But we did have a California LLC and we dissolved it, this year. Cause we started one business and then we went into our property, so we dissolved our trailer rental business here.
Ah. Yeah, and you got out of that.
It's too labor intensive.
Well, it took too much of our time where, our other business fits our
Your
business
lifestyle.
our business model and lifestyle.
Oh, there you go.
There you
It's good
go.
to have it combined.
Thank you.
Thank you.
Yeah, thanks for attention. So Arizona, yeah, I've got some litigation going here. A real nuisance.
They're certainly easier to do business with, it seems.
The courts or the business people?
The licenses and
Ah.
the taxes and that sort of thing.
Well, yeah, they're not.
The
We have
fees.
we have a problem in California. It's called diarrhea legislation.
Yes, we do.
And they just started, last year they passed over 900 new laws. It's like, who can even keep up with that?
Of course, Elon Musk said, forget it.
Yeah, a lot of people are saying.
Is she recording this now?
Uh, It might have been.
Yeah.
I don't think it worked out too well. But
Yeah.
Punch it.
we,
I think I would move out of California too if I could. I love California, but not move, but my business, if I had a big thing I can. I kind of can understand the reasons why he would. Although they gave him all kinds of things to start up and get moving, so he just doesn't have a lot of loyalty. Now goes.
Well, there's no state income tax in Texas.
my view on California is I watch laws go through, and they frequently are taking things away from business, taking things away from rental property owners, and they're just constantly cutting back the rights to do what you want to do.
Yes.
You can own the property,
But you
can
can't.
own the
But
business.
you have to let the squatter stay there, cause they
And
are right
we
there.
have-
No, we don't. No, I'd rip them right out of there before we establish residency, I promise you
Well,
that.
have you heard of the squatters and the handyman?
No,
Oh, this one's real fun.
you gotta just go every day.
No, this one, you gotta hear this one. So, you get a squatter and we handle sales of property for estates. We had a squatter in one.
So
So
define
what
your
you,
squatter, is he a renter that won't pay, or just
No.
a person who
A
walks?
homeless person.
Just a
who-
homeless
somebody who
person.
has no rights to the
Okay, I just
property.
want to know what
Yeah,
the
yeah,
definition is.
definition.
Okay.
So, this, handyman has got a system where they got a squatter, so they have rights,
Oh, I know this.
And so what he does is he talks to the owner and gets a lease.
He moves in.
He sits there and watches when they come in and out, and when they leave in the morning, we go in and change all the locks, put cameras all over the place,
And he's the rightful tenant.
and he's got a lease
Yeah.
from the owner. And so if the squatter comes back and calls the police, they say, I'm the tenant, I've got a lease here, and the owner signed it.
You gotta
What
say,
do
"I'm
you
gonna
have?"
back out of here."
And then, when he goes in, if the people come back and get it, and he says, I'm gonna eat your food, and I'm gonna sit and watch your TV, and, while
makes
they're
it
gone,
unlocked.
he moves their furniture out to the driveway.
We would do
It's-
something like
I would do.
So
I would
what's
do
the
that.
advantage to the handyman?
The landlord tenant laws, it's for the owner to get around.
It's the owner, but what's the advantage to this?
He probably
Oh,
gets
he's
paid.
paid.
He's paid by
Oh, he's
the
getting
owner.
paid.
He's getting paid, but he has to appear like he's not an agent.
Yeah.
Yeah. Right.
Of course, I was thinking though, if the
Shouldn't be
squatter,
squatting.
if the squatter trashed the place, then this contractor could say, oh, and I'll repair the place for you too.
Well, he is a handyman, so that
To
might be
get
part of
paid to do
it.
that.
That might be the
That may be how it started.
That's what I'm saying.
I hadn't got that nuance.
Well, everybody's got the advantage. My girlfriend and her husband, he's a contractor now, but they have rental property on the peninsula. And every once in a while, they have issues with people, but they have leases. And if people just don't pay, they try to work with them and this and that. But during COVID, it got crazy because they couldn't kick people out.
Right.
People lost their jobs
Right.
because of
They
whatever
modified the eviction procedures and stopped evictions.
Yeah, they stopped the eviction, but I think now it's coming back or something.
It is, but it's,
Alameda County's terrible. Northwest County's terrible.
they're in San Mateo County, so.
Better.
It's better.
It's
But he
better
did
now.
sell his property he had for years in Daly City. And they did it, he had like 3 tenants in an old building, and I guess he used up all the depreciation or whatever, got tired of it. So they did a 1031 exchange, sold that property, and they bought a second home in Calistoga. Right? But see, they're just deferring the capital gains.
Yeah, if you're going
Okay.
from a rental, you have to buy a rental on an exchange, it can't be a
But he
residence.
didn't.
Well, then it didn't qualify.
I don't know. See,
Well,
my
maybe he's renting
girlfriend,
out a part of it.
no, he's not, it's their house. So my girlfriend, she's a school teacher, she tells me, oh, we did this and we did that, and our attorney said that, and I'm like, whoa, wait a minute.
You don't wanna mess with that.
You know, and the reason we were so careful is because my husband was a licensed realtor, so we didn't wanna get sued by anybody, and we went with our attorney and our CPA and tried to pick people, and I worked for real estate attorneys, so I did all the legal work.
Oh,
I wanna make sure, my mom was a legal secretary in San Francisco, so we wanted to be real by the books.
sure,
We didn't
that's
wanna
the
mess
best
up.
way to do it.
Yeah, so.
But you got rid of all your rentals?
Yeah, well, that was another thing, because of the real estate crisis, or the mortgage on our home kept going up, and we kept paying the principal and a whole nother.
I mean, 2008, you're saying?
Yeah. So, after that, it was, cause we did a 1031 exchange on my parents' house, we inherited, and bought 2 condos over here, which was good, we split the risk. It was fine, those were fine. Our mortgage, our stupid mortgage, which I didn't wanna do,
You had an adjustable.
adjustable mortgage, cause I was a banker and I didn't wanna do it, but that's all that we could afford. The family room in our house failed. I should've just taken money out of securities and paid for it outright. Anyway, here we are. But I'm just working on my corporate jobs.
So how are you gonna market your consulting?
Probably you could just do a little, I have a Facebook page too, and I have a LinkedIn page, so I could do, maybe go on my Facebook page.
What are you consulting on?
Oh, I'm just thinking this, decluttering advice / decorating.
Anti-hoarding?
The anti-hoarding, but it's very complicated because people have, now I have it too, psychological attachments to
Oh,
things.
yeah, that's why a lot of, that's where it starts with the word.
Yeah, and it's,
My brother's girlfriend's like that.
I saw,
Yeah, she's not bad.
My brother's like, you need to get this crap out of here.
I'm like a minimalist.
Me too.
Get rid of it all.
yeah,
Mine,
well, I got the whole thing too, I've
I
got,
like this, it's broken, throw it away.
well, no, I got things I go through my mom's playbook. She saved, when she went to plays in San Francisco, and she's telling me, like, she would see Judy Garland and things like that. Well, I'm looking for autographs, but then there's an autograph law in California. It has to be certified. You can't just say, here, Judy Garland, sign this thing. No, it has to have a certificate that said it really was her doing it. Otherwise, it's
How do you
worthless.
get that?
Maybe you can have it authenticated.
I'm gonna
I
print
bet
it.
you.
Or you can have it, I think. It's
I bet
complicated.
you could.
And then I found things
With
my
a
mom.
color printer and
Yep.
a JPEG?
Yeah, no, it's
I could do
I've
my
learned
J.
some stuff in here tonight.
But then I've gotten rid of over 30 boxes, banker boxes of books, and probably 30 boxes of just paper
We can
and
do
shredded.
consulting on leadership.
No, that was the other one.
I know.
But I wanted to talk to her because I worked for the leadership development consultants at Chevron. And they have now, since they retired, started their own businesses, and I wanted to tell her some
Yeah.
names so she could talk to them, and how are they doing it, she left.
I might do that.
Networking.
I might do that.
Not really.
Depending on where we're at.
No.
Nothing to do with it. Depending on where we're at now.
But the consulting thing
We need
is
good shape. I don't want to
different for
consult.
me, because I've never really reached out for things like that, and it can be very emotional. But whenever I go on a job, I'm like, process improvement, process improvement. Either a manager gets it and we do it, or they don't get it, just do what you're told, do what you're told. I'm like, what you're doing is, you're going in circles. your business is gonna fail.
You could declutter on, like, Facebook, but like on the other ones too, like, for a little bit younger people, like Instagram, TikTok.
I don't go to TikTok.
No,
Instagram would be okay.
TikTok is,
You
I
should
mean,
pick
there's
it. That's the new
things that people
platform.
don't like about it, but like me on TikTok, I have 10,000 people to follow.
Wow.
Those people, if I wanted to sell something, they're all gonna see it.
Yep.
So maybe that doesn't work for you, but Instagram
Yeah.
is similar, right? Like you can get people and then they have different shops and you can actually sell stuff on their platform if you want.
Yeah, I even talked to some of the folks in Martinez, antique shops, and they go on Facebook Marketplace.
Marketplace for selling stuff.
And
yeah.
selling things, and, cause they just don't rely on
Right.
foot traffic on Main Street. They just,
I only say TikTok because they make small snippet videos that you could showcase your stuff, and that's what their platform is about, so it would be a great way to see before and after.
And you're gonna get a broader audience, because right
There's
now,
all
the
kinds.
Facebook, Instagram is more the older generation.
but that's my,
That's who you wanna reach.
that's who I wanna reach.
Yeah.
You see what I mean? I don't wanna be bothered with younger people, cause there's, I'm more of a baby boomer. I wanna clear out.
Older is up and coming, like they
Okay,
need
then
to
you
live
wanna-
at grandma's house.
They do.
Right, yeah.
Maybe.
No, I know.
Alright.
I know, that's the whole thing. It's,
Yeah,
it's a
But I was
complicated
like,
thing.
yeah.
Years ago, I saw, when I went to the city on occasion, there was a display, and this gentleman was a
thought about it,
photographer,
but I
and he
don't
took
really
a,
Oh,
sociologist to all these major, like, certain countries around the world, and they asked each government, give me statistics on what is the average family income. And they, I don't know, they found an average family. And what the photographer did is, okay, put all your valuables, put everything you own in the front of your house. Take a picture. And it was fast, it was called the materialistic world or something like that. And the countries that had the most stuff, United States,
For sure.
Germany, and England. But the person that won the most, and I can't think of it, something like Saudi Arabia or something. The guy had, he didn't have the front of his house, but he owned the whole building, so he put his 10 Mercedes and Rolls Royces on the top. And he goes, oh yeah, and I have my 5 wives, and we have the Quran, and you know, but they didn't have a lot of other stuff. Like Americans had 5 TVs and 2 computers and
Yeah, bigger stuff.
more little stuff.
Thank you so much.
But
Yeah.
thank
We
you.
learned some good amount of stuff. I wish we would have been here and I wish I would have heard your stuff a while back, cause my parents just went through a big probate with my stepdad's mom. Not a big, but they ended up losing her house because she was in a home for 10 years.
Oh,
And so the state wanted $600,000, but
Oh.
they didn't put a
Medicare
lien.
chargeback.
Medicare said we have a charge against the estate, but if then the law changed, and if they would have done it,
Put it in a trust.
if they would have done it then, but she had Alzheimer's, so that was the one thing that she couldn't sign away for.
She could. There's a way to do it. You
Wish they would've
go, to the judge and you get a substituted judgment. So you say, the judge is acting on behalf of this person who's not capable of, and that's what they would have
So we
wanted,
had this-
and the judge does it.
We had this lawyer that we were not pleased with, and he drug everything out, got everything, and I would never recommend him, but I wish that we could have.
Was he in a state elder care law?
I don't know.
See,
His name's
that's
Jay
what